Okay, I'm not there right now.
Hey, Dad.
Hey.
Can you back up your car?
Yeah.
Make it the possible. They won't come inside. Just play basketball.
Come over a little bit now, right now. Hey, come over at 5. 5:15.
5:15? You tell me it's 5:15, I'll be outside. What? What? The ball retains from ratio. I know. How did you get in? From here.
There's backpacks in the middle right here. Here we go. Hey, what's up, everyone? It is Tuesday, December 19th, and it's going to be a quick review of the futures markets, but even more importantly, a preview from the setups I'm looking for going into tomorrow. So, starting off right here with the S&P 500. To be honest, the only thing looking at going into tomorrow is just that we're in a very strong uptrend. I zoomed out a little bit right here, and if you look at it, it depends where you want to take this right here. I mean, you could even take it from like right there to right there, which fits on pretty well right here, actually. To be honest, could even go up a little bit to about right there. It's just an extremely strong uptrend right now. That's all there is to say. You can see it came out of a long consolidation phase, like right in through here. I mean, look at that. That's a long time. Now it's popping off and going up. And so the next thing we look for is eventually, not saying it's going to happen anytime soon, but another consolidation phase before the market decides to either continue. What?
Pressing for Elizabeth, there's trouble on the outside.
Sure. Before we see if it wants to go up or if the market's going to go back down for it. So that's just main thing right now, the trade setups we're looking at yesterday, they all got lit and got filled today. The big one was this one right here. That's not right. We'll go ahead and adjust that here real quick. Triangle right there. You see it went up and got hit today. So, you know, the other one that had a lower exit point got hit as well. So all the setups got hit from yesterday. The only thing we're looking at going into tomorrow is this 5-wave L8 move going to confirm right here, where what we need is from whatever the high is going to be, from that to come down and hit the purple line, which is the 23.6 retracement, then go up and hit the 1.146 level. That confirms it's a 5-wave move. But what cannot happen is price cannot go below this black line, which I put it right on wave 1 right here. It can't go below that line into it. So as long as it doesn't do that, we're good to go. But really going into tomorrow, that's the only thing that we're looking for. I don't have any live setups or anything like that. But going into the Russell 2000, we do have potential live setup. Now, the only thing to look at, the only thing that I question is, see here we have points 1, points 2, lower 3, potential higher high forward. Now, it obviously is a higher high for the expanded triangle. So we did have, let me delete some of the stuff right here. We did have an entry to it, but we do not have a confirmation right here where we did get a semaphore. So it's better to be safe than sorry, especially as this has been in a strong uptrend today. It was a blowout day today. If we go yesterday and we look at the daily extension levels, it blew up through it right when the market opened at 8:30, came down, used the extension high levels as support, and which is normally resistance, turned to support today, bounced straight off there, and closed high. So closed north of the previous high today. So extremely strong day in the Russell 2000s market. You know, once it opened up at its lows, that's basically the only time it was at its lows for today, and went up higher. So I'm not going to go ahead and go forward with this as being a live setup, just because we don't have even a green symbol. We need a green one right here to form right here. All these are oranges, which is fine, but to have an orange, you have to have a green inside of it, so we can have a green. If you go into the 5-minute chart, we did have one right here, but we also have a bunch of other symbols for it, but no orange one formed yet. It stinks because sometimes you will miss out on a trade before the semaphore forms. Like the price will be able to move down here, and then the semaphore forms, so you miss out on it. But it is better to be safe than sorry, so we're just going to go ahead and pull that right up there and continue waiting for at least a green semaphore to form, and then price to close below here. When that happens, we'll have a short trade, and the initial exit will be somewhere on this green line for it. So that's the main thing that we are looking at for this trade. Now, there was an inside trade today as well. If you see, there is 1, 2, 3, 4, and 3 or 4 within points 1 and 2. So if you take this right there, points 2, 3, and 4, went up there, and look at that. Right when the market opened today, went up there and hit it. And actually, I was in a previous trade for it because there was, where was it? I think this is it right here. Going into a couple of days ago, you can see here was a trade right here, broke out right here. Here was the entry bar for it right there. And I believe I got in, let's see here, the low to the entry bar high. I got in right around here-ish, 20.10, so a little bit higher than I would have liked. I want to get it down closer to the 50% level, but as you can see, it's close to it, plus it's hitting off the bottom line. So when it does that, when it hits either off the 1.146 going the other way, which would have been real low down here, you can see that was the low for it right there. So whether it hits that first or hits the offset green line first, which in this case it hit, and to be honest, I wish I should have had a contract down here to get in. I didn't, unfortunately, but if I was thinking straight, I would have had a contract ready to get in right here, but didn't. And then so it hit the green line right there. So when that happens, then what we do is we move the exit up to either one's fine, either to the entry bar right here, or or where the entry bar was right there where the entry was, or to the 1.146 from the low to the entry bar high, and that's how we got the 1.146. So see, price went all the way down to from point 22 of the move right there. That's the longest move. See 1, 2, 3, 4. Went down to the 1.146 right off the dot of it right there. I mean, look at that. That would have been just an amazing trade right there if I had seen it. I wasn't paying. I got to pay better attention. Look at that one right up there. Nice, at least easy 45, 46 point gain right there in the Russell. But anyways, found sport, and then today when the market opened, extremely strong green bar right there. Go up there and hit it. It's that one. So easy trade right there. That is how that works. So yeah, going into tomorrow, this is what we're looking for right here. We're looking for a short setup as soon as whatever the high wants to confirm, and we get a green semaphore right there. We get it closed below the yellow line. That will be the short entry that we're looking for it. The Dow Jones is pretty much the same setup as well. It has the same thing, but now we do need an orange semaphore, unlike we had on the Russell here. Right, come on, Russell. Is that the Russell? Yeah. The Russell, we can get either a green or an orange. Well, green will form first, since it goes green, orange, and then red. So we're just waiting for a green, but on the Dow Jones here, we're waiting for an orange, because here we have orange, 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 and they need to be consecutive. So we're waiting for an orange here. That's why we can't wait for a green, because we already have two greens right in here. So here we have, kind of a fake out where we have the high, we had to close below it, but then price is powered up over here. So one thing I do want to look at, though, this is one thing I do want to look at. I just need to put a note in use point for if you are safe in the 146 extension on not for. So this is a question I have for it right here. Can you use this as 0.4? Because here, what this is, before we use this as 0.4, we do have, there's the entry bar right there. So what if we go from 0.3 to 0.4, because that's the longest move of it. There's the 1.146. You get in right there, and then the exit for that one will be from 0.4 to the low of the entry bar right there. It'd be either the 1.146, or we want to play it safe, the where the entry was for it, and it'd move off the green line. So that's just one thing I do want to see, and actually I do want to see it for the Dow Jones as well, because if that's the case, then that's good. And that means that this is going to be a confirmed entry. We don't have to wait on the semaphore, or do we need to do it like I just mentioned on the Russell 2000 and wait for this semaphore to form and to close below the line before you get into it. So I'm going to look at that for both the Dow Jones and the Russell 2000, but the Russell 2000 will be an easier entry because we just need a green one to form up here, where the Dow Jones one may not be in quick a time just because it takes a little bit longer, obviously, for the orange one to form, since you have to get a green one to form. But we're going to watch both of those because it's just something it's one thing that had been on my mind, because sometimes it works great where you don't have to wait for the semaphore to form up there. You already have the three ones, and but sometimes, I just want to make sure it just doesn't go away from you. If it does go away from you, then is anywhere from the 1.146 to the 1.14 the next entry area, and whether it hits the 1.146 or goes all the way up to the 1.44, then does the exit move down to, you use the 0.4 down to the entry bar down to there. So just one thing looking at going into the what's it called, oil. So got a lot going on over here. So the main thing, to zoom out a little bit right here, we're still looking at seeing if either the 7 or the 8 line from this 5-wave move is it, because there's the 0, 1, 2, 3, 4, 5. And so price, when you get the 5-wave move and price breaks above the red, that targets the white line, breaks above the white, targets the blue line, breaks above the blue line, then potentially the target is either the yellow or this light blue line up here. Now we have had a retracement down here, but we haven't gotten it far enough where if it goes down and reaches the blue line the opposite way, or if it goes down to the 1.146 from the 5-4 move, that then the exit moves to the either the entry point or the from 0 to the no, excuse me, 0 to entry bar right there, the 1.146 right there. So it is a lot going on right here, but that's just what it was up to Joe. No, this right here is oil right here that I'm looking at right now. I'll go back to the ES here in just a minute. I talked about that a little bit earlier. So
Hey, Dad.
here's up.
Can I go to Potts house? Brad came down and told me that they're playing football.
Yes.
Okay.
Who's outside?
Lady, Aubrey, and Elizabeth.
Oh, okay.
Wait, can I go down?
Yeah, you can go down there. All right, so crude oil. Yeah, let me do crude, and then do Nasdaq now. And then I'll go back over to ES here real quick. So going over for crude oil, yeah, we're still waiting to see if this thing is going to go up and get hit right there. I'm going to hide it to get that off the chart. Let's get that off the chart right there. So what we have right here, where is it? Yeah, right here. So in crude oil, let's get this off of here. What's this for? That off of there too. What we have in crude oil right here, we do have a live short setup. So here we go. 1, 2, lower 3, higher 4. The symbol for it actually works. Here we had the closing bar below it. So there's the entry point for it. Yeah, missed out on this trade right here where it goes up and hits the 50 once it confirms the short and goes down and hit the 1.146 for it. So that one missed that one, unfortunately. So now what I'm just waiting on, I'm not going to get back into it because still right here, the green line is the exit point for it right here. But if the price continues to go up without hitting the green line and hits the 1.146 the other way, then the exits change and they go down to either where the entry point was down here or the 1.146 level right there. So it's really not a good risk reward as far as time management, because as you can see, the green line is sloping up, going away from us as the time goes away. So you know it's already when it gets to 7:15 p.m. here Central Standard Time, you know it's already past the exits past the original entry point. So just not a good time to get into it. So wait to see if this thing pops up some more during the overnight hours. And if it does and hits that, then that's where the exits move down to. But unfortunately, the original kind of easy trade setup was I missed that one. But we'll wait to see what happens for oil. And let's see here now, going over to Nasdaq. I'm sorry, we're on one more quick thing of oil. Going the opposite way of oil, we had a 5-way move down right here, 0, 1, 2, 3, 4, 5 down here, but there weren't any trades with it using it. Let me show you here real quick. See, price never closed below the red line down here. It's gone up the other way, so it's neither here nor there. So what we are waiting on is to see if we do have potential 5-way move going up here. The other way, there's potential 0, 1, 2. So we'll put this line right there. Oops. There we go. You right here. Move you up. There we go. 3, 4. Well, you know what? We do have right here. Okay, so we do have a 5-way move now going up here to the upside. So let's put this on you. 0, 1. Oh, that's not right. 0, 1, 2, 3, 4, 5. Does it come down and hit the 1.1? The other way it has. Okay, yeah. So it's solid. So let's hide this real quick and see. We'll hide this too. That too. We're gonna need those. So let's put the pitchfork on for it. See what that looks like. So here's what we have for this one right now, potential upside trade for it. We have, so there was, let's see, the fifth point got finalized right here on this bar, on that one right there. So when price finalized there, and it would close above the red, the target was the white, it hit the white. Now this bar has closed north of the white bar with the target, let me check this high lows off, with the target being the blue line, and the blue line has not been hit yet. So, it looks like going into tomorrow, there is good potential for more upside here for oil going up into tomorrow for this one. And then if price closes above this blue line right here before hitting this one, we'll just use this first scenario. If price goes down, hits the blue line first without closing above that, then we won't worry about this move anymore. Well, we're still waiting on this blue one to hit. But if price goes up there and closes above the blue line, which would confirm get rid of that trade as well, closes above this blue line before hitting that blue line, then the target moves to this yellow line right up here. So actually, this is looking like a pretty decent one to get in long with right now. Let's see here. I want that. That's all right there. So we have this short one right here, but we also have this blue one that we're looking at going long right here. So it's very, 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 very interesting right now. So my guess would be, this is my guess would be what would happen. Price, when it opens up, the market opens up here in 4 minutes, waffle along, you go hit the green line for it to get out of that short trade right there. And then going into tomorrow, continues to rally up, hits the blue line, and then we'll have to see if it's going to close north of it or just hit it and then retrace from it from there. But this is a good long setup right there, which actually I'm thinking about getting in right there for it. Yeah, seems pretty decent. All right, last but not least, Nasdaq for it. Nasdaq, there's not a whole lot to it. Wait and see if a 5-wave elite move is going to go up there and get hit. See, we got 3, 4, and 5 waiting. The 0, 1, 2 points have happened. We're just waiting for retracement, come back down to the 23.6. And we're still waiting for this target, this green line up here, to go up there and get hit. We can see, ever since price broke out, they confirmed the trade right there. It's been an uptrend since the past 2 days, but just hasn't gone up there and hit that green line for it to come through. So we'll wait to see tomorrow if it goes up there and hit it. Yeah, I know, Jojo. Yeah, that's what I'm guessing's happened now, is that the Santa rally is going full effect this week, and yeah, the Santa rally. Yeah, that's what I'm looking at. Yeah, if we look at the overall, let's see, go back to weekly markets here. I mean, we are extremely close. So the all-time highs were the S&P 48.08. Hey, you know what? We passed it, dude. Yeah, with the all-time highs were 48.08.25, and we're at 48.20.25 here in the S&P 500. So, yeah, I mean, we've reached not just yearly highs for the S&P 500 market, but all-time highs for it today. So, all right, we're part of history. Cool, right? So there we go for that one right there. All right, yeah, real quick for Nasdaq. Yeah, that's what we're all waiting on to see if price goes up there and continues to push up, hits this green line. I mean, if this thing continues, just move up and then hit the green line, we won't call it a trade, because here's the entry, and we'll see. Yeah, I know, right? Yeah, it looks like final peaks before monthly turn. Exactly. I know, it does look like that. Yeah. So see if we get another push through going into tomorrow. Before Christmas, because most people are going to be off on Friday. Most big traders are off anyway this week, but volume on Friday should be pretty dead, since most people are going to be off for the day for it. Going back to the S&P 500 real quick, Jojo. Yeah, there's not a whole lot to say. It was just that these long setups that I was looking at going into today, they all got fulfilled today. See right there. Let me change it to the correct one. There's the entry for this one right here, and that one went up and got filled today right there. So the longs all got filled. I don't have any open setups or ones that could potentially happen going into tomorrow. The only thing I'm looking for is a potential 5-wave elite move. Here we have the 0, 1, 2. We're waiting on to see. We need to get a retracement from where the potential 0.3 is to come back to the 0.4, and price cannot drop below that line right there to make it valid for it. Then obviously it needs to go up there and hit that. But really, to be honest, that's the only the only thing I have for the S&P 500 going into tomorrow. Outside of, if you zoom it out, look at it, it's an extremely strong uptrend. Ever since December 7th right here, it came out of a long line of consolidation right here, going back to about right there. Look at that long line of consolidation, and then since then, just however you want to take it, it's drawing these lines are subjective to it. But as you can see, it's really easy to see. It's in a, even stronger than a 45 angle move, 50 or 55 degree angle, been going up for it. So we're just in a extremely strong uptrend right here for the S&P 500. So eventually what will happen is we'll get into, just like we came out of this consolidation right here, eventually we'll get into, when the trend line breaks, we'll get into some consolidation, wherever that will be. And then we'll have to wait and see when it comes out of consolidation, which way the market's going to go. Is it going to continue higher, or is it finally going to retrace some? Because that's how the market always goes. It goes from consolidation, then it moves either up or moves down, and then when it does that, then it goes back to consolidation, then decides to either move back up or down. But the next movement we have, or the next kind of like multi-day movement, would be like a consolidation for it. Sideways, I hit 485. Oh yeah, let's look at this SPY. Oh yeah, this is nothing I need to mention right here. So unfortunately for this trade setup that I had been doing, either I'm going to have to adjust some things for it or call it dead in the water right here, because yeah, 480 is that your target you have, JoJo, going up to 480. Yeah, I could hit that. Just 6 more points on the SPY. Yeah, so this trade right here was the all this is right here, the ABCD trade. Yeah, you're right, JoJo. So ABCD, you see that. So once you get that, then you just put the Fibonacci retracement levels on it and waiting for price to come back up to it. And as you can see, the original one I had was when price hit the 50, the exit was 38. Then if price hit the 61.8, you get in again, move the exit to the 50 to be a winner, and the price goes up to the 76.4, get in twice the amount of contracts, then just below the 61.8, which is where the black line is. But see, that didn't hit. Now that has happened from time to time, but when that does happen, and then you normally could count on the 1.4 and 4 the opposite way to be kind of like the backstop for it. And when price hit that, it would come all the way back down to 61.8. Saw that many times happen, but price has been popping off, going off even higher right there. So I'm getting ready to just call this trade dead in the water and done. But one thing I was looking at is seeing is, okay, well, as you can see from right here, the 88.6 that I just added onto it, that one did work down to the 76.4 for it. So maybe get rid of the 50 at your first entry, and then your first entry is the 61.8 for it. But I don't know, there's a lot to be said for that one. But yeah, prices continue to go up for this. So this one's being close to calling this trade not working. So yeah, I don't have any targets for the SPY, but yeah, Jojo, it could easily go to 480. Yeah, no problem at all. So I'll keep the live stream on for a little bit, but the recording, we're going to stop here for the day. So thanks, bye. I've got to go over Bitcoin. We'll look at Bitcoin here real quick. Yeah, so Bitcoin right here is the main thing we're looking at, is seeing if we're waiting to see if this retracement comes down to 23.6, and that would lock in this 5-wave move for it. What's all the stuff I have on here? Goodness gracious. I have to lose some of the stuff. So then we have we'll go to the weekly time frame because that's easier to see. So what we have from right here, 0, 1, 2, 3, 4, there's the 5-wave move, there's the close above this blue line. So if this is going to be a valid trade, and that tells us that the yellow line is going to be, either the yellow or blue line is going to be the exit, but that did not happen. Price came down, hit the blue line at the other way. Plus it also hit, if we take it from 0.5 from that move to 0.4, it also hit the 1.146 the other way right there. So when that happens, the exit criteria we're looking at implementing, you go from the 0.0 to the entry bar right here, and it closed above it, and then the exit we have is the 1.146 right there. Bitcoin have it in about 5 months? Yeah, I mean, it could. Yeah, definitely could. Who knows? But that's to see if this trade setup works, and this trade setup is still in testing and still in theory, to see if that one is going to work right there. If that's the exit we have for it, potentially at 74,470. But yeah, I'm not even sure if this setup works off this 5-wave move. Yeah, I am. I have, it's long term. I don't day trade crypto. I have Bitcoin and Litecoin here for it right there. So we do have a long setup here on Litecoin. See, there's the 1, 2, 3, and 4 within points 1 and 2 right there. So when price closed above it on that bar right there as a signal to go long, with the exit up here, this green line at 169.77. If price goes, which I don't know if it can go all the way down here. Yeah, all the way down to this green line down here. What is this thing? If price goes down to the green line, which now that's negative, so that can happen, but if the goes down to the 1.146 opposite way from the big move, which is from points 1 and 2, then we move the exit to 124.66. So pretty bullish on crypto, especially Bitcoin, since that moves all the markets for it right there. For it, did we have a 5-wave move down this way? So this one was the higher. Let's see here. Okay, is 0, 1, 2. No, because that one broke back into it. Let's see if any of these could have been it. Nope, 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 nope. So did that one get broke? Yeah, well, that one hasn't gotten broken yet. So it's still potential for 0, 1, 2. So it still could be a 3, 4, because it would have to be, that has to be broken at 45,415, and it still hasn't gotten broken yet. So yeah, there still is potential for this being a 0, 1, 2. That'd be 3, 4, and then the 5-wave move would be all the way down here. It would be a huge collapse in crypto, down to at least 69.80 for it right there. But if 45,415 gets penetrated, then that 5-wave move goes off right there. Oh, thanks, Jojo. No, I'm not a prop firm futures. I just do it as a hobby. I've been doing this for, trying to think, off and on for sure, about 18 years, probably consistently day trading, looking at the charts on a daily basis, probably for about 5 years, and then probably more serious than, or not serious to this, but probably I really got started in futures trading probably around 2008-ish, and then got back into it around 2011, 12-ish. Got real big into Forex trading around 2014 for a while, and then took a little break, and then about 2017 or 18 got back into it, and have been just looking at it ever since. I think that was when also TradingView started up, because TradingView makes it a whole lot easier, because before I was using NinjaTrader for it. NinjaTrader is great charting software. The problem with it is you have to have it installed on your computer, and when you have a full-time job, it's hard to bring your laptop to work. This is pre-COVID for it. But then once COVID happened and start working from home, then obviously it became a lot easier to trade. But when I would have to go to the office, or using like the or looking at the charts using the work laptop, I just log into TradingView and do it all from there. So that makes it easier. Are you a millionaire? No, man, I wish I was a millionaire, dude. It's been a long road to learn. So basically what I did was It just, shoot, way back in the day, way a long time ago when I was in high school, what got me started was senior year in high school, we did an economics project and you just had to choose 5 stocks. And throughout the course of the semester, you had to, is it much more user friendly? Yeah, Ninja Trader is great. I love Ninja Trader. He was great. One of my good friends who, when he was alive, he used was Ninja Trader, and he loved it. And that's what I used for a long time as well. That's how I got my start for it. It's just with TradingView being web based, and it has most of the things I like. The one thing I hate about TradingView is that they don't have like. It is 5 o'clock. All right. So when you want to hold on, I'll make sure I don't get in on something I don't want to get in on. I will do it down here. Hold on. So when you want to get in an order right here, what they don't have is, well, I don't want stop loss, but see the take profit right here. This is the biggest knock that I have on the way TradingView has it set up is they don't have it to where you can have say I want to buy four lots right here. You see, they only have one take profit level. They don't allow you to get out at different levels for it. And that's one thing I cannot stand about them. I've asked them if they were going to fix it and change it, and just really haven't gotten any response from them, because it's not hard to do. I mean, you can do it on Ninja Trader for you can have different profit levels if you're in different multiple contracts, but for whatever reason, they just don't want to offer it for whatever reason. But other than that, it's pretty decent. I just go through AMP futures for the broker, and they've been real good. Hold on a second. Daisy, hey, hush. So, yeah, but no, that's what got me into way back in the day, and then I just always followed it for a while. Then I was in college. That's when Jim Cramer was coming out, and he had just started his show, so that really got me into not necessarily day trading, but just trading stocks and stuff like that. And then fast forward a little while longer, that's when I discovered day trading rooms, and all those things did was take my money for them. So I spent a lot of money trying to think that people selling their subscription services to day trading rooms, that they knew what they're doing. They don't know what they're doing. I've never been in one where anyone has made any money. And the only person making money is the company or person selling the subscription services to it. There are a couple people that I do like out there that I think can be good tools for your trading. But what I always recommend to people is figure out your trading style and teach yourself, because you don't need to spend thousands of dollars going to a trading room for some dude or some woman to claim that they're making all this money on day trading, because customers are very hard to deal with. And if you can make good money trading, if you can make, especially if you're making a couple $100,000 a year from trading, why would you have a trading room? Would you just have people asking you nonstop questions? You have people complaining about you, when they lose money. And then when you don't have to deal with any of that, you can make an amazing living doing that. So all those people, I think pretty much everyone out there selling those trading room services, I think are pretty much like charlatans, that they're just trying to trick their money, and they don't provide any source of statements that they're making money. Like AMP futures, every single day at night they send me overall my trading summary for the day, profit losses. They do that in a daily summary, and at the end of the year they send my yearly summary for it. I've never seen any of those people who claim that they make money trading doing trading rooms provide statements out there, yearly statements, not just one yearly statement or even two. I mean, because you can be lucky, you can get lucky for a year or two trading. You can do that. I've seen it before. I've done it before, and you can get lucky out there. But I've never seen someone consistently who's claiming that they make a living trading, who also sells their subscription services, do a 5-year Daisy, stop. Do a show 5 years of continued profit out there. Why? Because it doesn't happen. Those people don't make money. How they make their money is they're selling their their lifetime access for $2,995, whatever it is for it. So that's just my rant about that. So what I always tell people is, instead of using that $3,000, that $5,000 you're going to pay for those trading rooms, take that money and you go trade yourself. Because now that they have the, let me show you. Now that they have the, and you may trade trade live as well. But since they have these micro contracts in there, because when I first started trading, they didn't have these mini contracts. They didn't have these minis. All we had when we started was, well, that's all. Got to scroll up some more past it. Yeah, this is all we had starting out. We just had regular contracts right here. So the people with the catch line was, oh, you can day trade with only as little as $400. Nah, that's not true. As soon as you have a losing trade, they call your margin. You have to put more money in. So like the overnight maintenance just for one contract is $11,200. Well, I guess what happened was, 10 or so years ago, however long it was, when they introduced the mini contracts, maybe not that long ago, was not enough money was getting into the markets for the smaller traders. They were just getting wiped out, because who wants to lose like a couple grand within, 2 or 3 weeks and then be done with it? So they created these smaller contracts. So then it's a lot easier to get into trading, where if you have losses, it's not as bad. And so this has enabled it to be a lot easier, since, this is 1/10 the size of this contract, so obviously it takes 10 of these to equal one of those to get into it. But if you want an even kind of safer trading method, then go into Forex, because it used to be, before the U.S. government has tried to like protect us from ourselves. It used to be you used to get 1 to 400 or 400 to 1 margin for it. Now they changed that. I think it's like 50 to 1 or something like that. It's still good. It's still better than the futures markets, but it's 50 to 1 where it used to be 400 to 1. They claimed it was like to protect us and stuff like that. Everything they do is not to protect us; it's to take money from us. The game was rigged, but it's just what you have to realize, that if you're going to play the game, you have to go by their rules. And so as long as you realize that, then it is what it is. I think the easiest example to show how it is rigged against like us is, a couple years ago when GameStop was popping off, and all those, Wall Street bets or whatever, all those people were getting into GameStop. For once, they destroyed that hedge fund that they just short stocks into the ground, and they broke that hedge fund where they got enough money just from normal people, and they made the stock just skyrocket up because a short squeeze happened for it. And so then people wanted, to sell their stock, because, they got in GameStop stock at $5, $10, $15, even $20, and it skyrocketed up over $200. So people were making some seriously good money on that. Well, what happened was all the exchanges got together, and they wouldn't let anyone outside of hedge funds sell their stock for like a day or two, sell the GameStop stock, because they were going to market manipulate. Options. Yeah, dude. Yeah, it was insane. So they were going to manipulate it to where they were only going to allow certain hedge funds to unload their positions, and everyone else wasn't allowed to. So like, if we can even look at it when it happened, I forgot exactly when it happened, but that's when right there that I realized like this whole thing was just like completely rigged. Yeah, I think it was like right over here. Yeah, I think it was like right over here. It's one of these days or something like that, when they would only allow hedge funds and stuff to reallocate it, and then finally people started selling off their stock, and that's what brought it all the way down for it. But that was it right there. That what people didn't realize, that this whole thing is like rigged against us. But hey, you have to do what you can to make it. But anyways, that was my soapbox. I guess AMC. Yep, same thing with AMC. AMC was the next one. Yep, same there as AMC when it popped off as well. That was another one. And so yeah, those hedge funds got squeezed for a while, but eventually it's right back down to where it was before. But golly, AMC was even wilder ride than GameStop. Look at that, man. They're down to less than 10, and the highest point they went close to 400. Wow, that's amazing. But anyways, yeah, at the end of the day, just what I recommend to everyone is, any money that you're thinking about going to a subscription service or something like that, don't do it. You can, because nowadays with YouTube and everything, you can find whatever you're looking for, and how to trade something, what you're looking for, trade through just free YouTube videos for it. And then, but what it is trading is a reflection on each person's psychology, where I can show you how I trade, which I do on here with all the trade setups I'm trying, the ones I'm using, the ones I'm scrapping, but you won't fully embrace it or be able to utilize it correctly because you didn't create it. So that's why I recommend everyone needs to create their own trade setup. Sure, you can take bits and pieces from what's worked from other people, find out if it works from you, but craft your own trading system, craft your own trading style, because then once you see that it works, you'll completely understand it. And even more importantly, you'll completely trust it rather than trusting someone else for what they created. Because that's the main reason why. There's two reasons why trading rooms don't work. One reason why is because one, the people trading in the rooms calling the trade signals, they don't make any money trading. They're losers at trading. They don't make money trading. The second reason why is you're copying someone trades. So deep down, even if they're claiming they're profitable and everything, you believe they're profitable, that's fine. But deep down in your psyche, you do not fully trust it because you didn't create it and you fully don't understand it. So that's why I recommend, take all the money. I'm just using it as a just overall example. If you're going to say spend $5,000 in a trading room, learn from some guru or something like that, use that money. You just put it go to AMP Futures or any other broker you want to, deposit that money in there and have your own trading style, have your own trading system, and test it out live from there. You can do some practice trading, that's fine as well, but practice trading, paper trading is not the same thing at all as live. Like even if you're trading pennies at a time, there's just some switch that gets flipped in my brain where I know it's completely different between paper trading and live trading. Now, paper trading is good going through and just like I review old charts all the time, to see when I'm working on like trade setups and stuff like that. Of course, I review old trade setups and things like that. But when I think I found one that works after reviewing, doing a whole bunch of steps and everything, I just go live with it because that'll teach you extremely quickly if it works or if it doesn't work. And the biggest thing that everyone has to deal with out there is fear and greed. Those are the two emotions, no matter how good of a trader you are, you will deal with in every single trade. It's just the difference is you will know how to monitor those feelings when you're in a trade. In every single trade I'm in, I still battle them. If anyone who says, "Oh, I don't have those feelings when I'm in a trade," they're complete liars. It's not true at all. It's just once you recognize those feelings, you know how to manage them to where they're not going to make you make bad decisions when you're within a trade. So that's what I recommend. If you're looking at day trading and stuff like that, don't join trading rooms. Study as much as you can, but you need to figure out how each person wants to trade because there's no one right way to trade. The only right way to trade is what makes you money. Because what works for you may make me go bankrupt since, every single person created has a different psychological makeup. So you have to figure out what your trading style is, what's going to work for you, and what you enjoy. That's the biggest thing about it. Because if you don't enjoy trading, you're going to whoever it is, not saying you, I'm just saying you as an example, is going to completely fail. So, if you enjoy trading, awesome, continue with it, and then figure out how you want to trade, what you want to trade, the time frames you want to trade. Do you want to trade futures? Do you want to trade Forex? Do you want to day trade stocks? Do you want to be a swing trader? Do you want to be a position trader, more of a long-term trader? Do you want to, I don't mess with options because every time I mess with options, I lose money on there. So I learned that the hard way. Two things I'm going to do. I don't trade options and I don't go to casinos and gamble anymore because each of those I only lose money. So if I do one of those two things, I just know going into it, it's basically just entertainment dollars because I'm pretty much going to lose that money for it. There's a lot of considerations to do. And then even if like you're day trading out there, well, do you want to do like what do you want to do? Do you want to do a time-based chart, 15-minute chart for your main chart, 5-minute, 1 minute, a tick chart, like a 2000 tick chart, which I don't think, again, this is another. Yeah, see, that's another thing that TradingView doesn't have, which is a negative for it, is they don't have a tick-based chart where like Ninja Trader does. It has you can do like 2000 tick chart, which is what a lot of people do out there. So it takes 2000 contracts traded to create a bar for it. There's just tons of options, and like I said, there's not one right or wrong way to trade. It's completely individualistic on the person, and it just depends on what your goals are. Like I said, there's not a right or wrong way. The only wrong way is if it loses you money, don't do it. The right way is if it makes you money, then do it. So that's if someone tries to like say that there's one system or one way and this way works, well, they're trying to say something. Yeah, dude, just take your time. Learn from my mistakes. That I spent a lot of money on trading rooms over the years on these gurus who promised, if you give me $3,000, you give me $5,000, and join my trading room or whatever, we'll make you tons of money. It's all lies. Don't do it. Just My recommendation was if I was back to being 18 again and doing this, I mean, now you have a whole lot more options than 20 years ago when I first started really looking at this. Is take it slow, find out what you want to trade, how you want to trade it, and then when you get enough money saved up to, if you're not trading already, and you're ready, you've tested out some setups or at least one setup that you like, you back tested, you looked at it, you think it's going to work and everything, then just go live to it, but just trade the smallest amount possible, because he'll tell you, you'll find out really, really fast if it's going to work or if it's not going to work. If it doesn't work, which is most of my setups, is because my goal is to break my setups, is because if it doesn't work, I don't know if it doesn't work. So that's why I create the setups and then initially just seeing if they're going to work. And I literally try to break them to try to find ways to make them not to work. And then I can just scrap them and go on to the next one for it. Okay, good. Yeah, dude. Yep. Yeah, that's good, man. That's my recommendation, dude. Don't spend any money on courses ever. Don't ever do that. Just all the money you're going to spend on courses, just put it into the market and learn for yourself. Yeah, fear and greed. That's it, man. Fear and greed. Those are, and you know what? Fear and greed are two of your, those are the two emotions that you'll never get rid of. They will always be there for you. There is no way to get rid of them. I've done a lot of psychological work. I spent thousands of dollars going to specialized trainers and stuff like that. And there's some cool experiences and things like that. But fear and greed are just part of every human's emotions out there, because like when you're in a trade and the market's going up, you get greedy because you want to try to, at the one time, you want to maximize how much you can get for it if it hasn't hit your profit target yet. But then at the same time, you get fearful. It's like, oh, what if it retraces back down? I'll lose out on that. And then when you're in a trade, and if it's a losing trade, you get fearful, like, oh man, this thing's going down to zero. I'm going to lose all my money for it. So it happens every single time I get in. It's just, as I said earlier, you learn how to cope with it. You learn how to deal with it to where it's not going to impact you, to where you make rash decisions and go against your trading plan. Yeah, that's good, dude. Just watch videos. Yeah, like I said, YouTube just has a wealth of training videos. Look, a lot of them are crap out there. You'll find out very fast if the videos are crap or not. The people are just trying to get views and watch time and get their ad revenue for it. So they'll just, especially with AI now, a lot of people are just creating a lot of AI-based videos out there that really don't have much content in them. But hey, they're free, so it doesn't really matter. Yeah, and finance books. I used to watch CNBC religiously, Bloomberg and all that stuff. I really don't turn it on anymore. If you do watch it, just know it's just for entertainment value. All those guys and girls on there, the information they're giving you is after the fact, so you can't use any of that information to trade on, because all the people who are making money, they've already made the trade before that information gets reported to CNBC. Because CNBC and all those news stations, financial news stations, they're on the same team with the SEC and everything like that. Their job is to make the hedge funds and the big whales out there their money, and then everything else that they give to us little people out there, is information after it happened. There's nothing that we can use out there. So if you just go into knowing it's just basically entertainment, which is why they have like Jim Cramer on there, especially to get that entertainment factor up there, to get some emotion, because at the end of the day, finance is boring. It's just dollars and cents. It all it is. So people have to spice it up, make it sound more interesting than it really is. And then, of course, they use a ton of terminology to just try to confuse the average person out there. Like, instead of just saying, hey, the market's going up, oh, it looks good. If the market's going down, it looks bad. They have to use bears and bulls. Like, why'd you have to use bears and bulls? Why can't you just say, oh, the market's hot, the market's good, if the market's going down, it looks bad? And like the options, instead of just saying, hey, I want to buy an option that's going to make money going up, when they call it a long option, let's go buy a long option, instead of saying, oh, I want to get buy an option that's going down. Well, that's called a put, or a put option for it. So they just create all these terminologies just to try to confuse people out there. Money elsewhere, but I don't like, for my long-term stuff. Like, if you hold stuff for over a year, then the capital gains taxes go lower than if you hold something for less than a year, which I believe that is, again, I'm not taxed out by any means. I pay someone. That's one of the things, Jojo. I'll give you a little words of wisdom here is when you have to start paying taxes, and especially if you have like trading stuff that you have to put into your taxes for your profit losses for overall year, plus your job, whatever you do. I would highly recommend hiring a CPA to do all that stuff for you. Years ago, I made the mistakes when I was trading a bunch of stocks, is that the IRS claimed I had made like over like $300,000 to $400,000 of profit when it was basically just trades I had done. And so I spent a ton of time sending them all the information they requested, showing them that I didn't make that much money. Here's all my trading stuff. I think I made like $2,000 for the year. It wasn't a lot at all. It was when I was in my early 20s. And they didn't do anything with it. So then one day I'm at work, I had the HR woman at work call me and say, hey, I got bad news. I just got called from an email or a letter from the IRS, and we have to start garnishing your wages because you owe them a bunch of back taxes. And I was like, what the crap? So I explained to her what had happened, and she goes, oh, okay. So she gave me the number to this law firm who deals with battling the IRS, because she had to go through the same thing. It was a different scenario, but it was similar, same thing. Deal with the estate taxes and stuff like that. So I called them, told them what was happening, and it was the best money I ever spent paying them for them to go battle with the IRS. And so eventually, 6 months later, I had to sign this contract with the IRS saying that, because what I did was the company that I used was literally suing the IRS on my behalf because I showed them what had happened, and they're like, yeah, they're screwing you over big time. And they're made of a bunch of former people that used to work for the IRS, and they have a bunch of lawyers as well, so they know how to get through to them and everything. Because me, I couldn't get through to them no matter what it was. It was the most frustrating thing ever. So to make a short story long, once you start trading things like that, you have a full-time job or whatever, hire a CPA, let him deal with it all, because then if the CPA messes it up, then he has to go fix it at a later date. It's not on you if you're using like TurboTax or the H&R Block or something like that. It's on the CPA to go and fix it. So it's only like a couple $100 a year for me to go do it, but it's the best money I can spend a year to make them to have him do that for me. So no, I don't reinvest elsewhere to avoid capital gains. If it's like a long-term investment, I'll just at the end of the year, I remember like a good probably. So probably my biggest win loss. Well, my biggest loss is easy. I'll tell you that right now. It's Forex. So I have a website I need to update because I switched over the hosting platform for it. It's all messed up right now. But anyways, it was when I was trading Forex, and I took like a $2,000 account and got it north of $20,000. But then greed kicked in. I got super greedy, started taking like trades within the trades because I was mainly trading off a 1 hour and 4 hour chart. So I started taking smaller trades because I wanted to keep on increasing the revenue that I was making each month for it, and just got way over leveraged. And of course, the market went against me. And if I was in just like my normal trades and stuff, I would have been fine. But since I was in all these other trades and everything, I basically, went down, basically lost it all. And so that was a good kick in the nuts right there for that one. And then, so anyway, that was greed kicking in right there. That's, my best example of how greed destroyed that account right there. Let's see, the biggest one was ConocoPhillips. So what I started doing with ConocoPhillips was, take all this stuff out right here. So way back in, I don't even remember, probably 2012, 13-ish, there's a website you can go to that's called a DRIP, a direct investment income portfolio, where basically there's a bunch of stocks you can, I believe the website is like Computer Share. Let's see here real quick.
What's up, everybody? Today I'm going to show you 5
this is right here. So
moves
this website right here, Computer Share. Let's close that. Computer Share right here. What you can do is you can log on to it, and what they do is individuals, shareholder. Okay, nice. Anyways, I'm not going to go into it. Anyways, what they do is you, for like a minimum of $50, whatever, each month, you can they'll just deduct it out of your bank account, send it to them, and they'll buy $50 worth. I'm just using that as a number. You can use, up to like $5,000 or $50,000 if you want to. But they'll buy the stock for you, and it doesn't cost you any transaction fees. And this is also before there wasn't transaction fees in a lot of the stock trades anyway. But they'll do it for you, so you don't have to worry about it. Each month they just take out a set amount, and they'll buy even fractional shares right there. So I started doing it around in like 2012 and 13, something like that. And then the market started going up and up and up. And then, when we had that last oil crash down here, when the market got down, the oil price of oil that one day went negative. Obviously, ConocoPhillips went down with it. But two of the reasons why I was buying them was one, I felt when I started buying them, it had potential to go back up. And two, they gave a dividend as well. And so the dividend you got for all your shares, I just had it automatically reinvested. So between those two things, it going up. And then the dividend for it, I was getting more shares as it went along. So then as well, when it started going down, creating all the way down here, I was still using that money and it was still buying, each month for it. So the lower it got, the more shares I could buy. So then I think when the price got to, was that Monday? 20th. Yeah, so no, I was still buying it down there. It's going back over here. So right around last year sometime, I don't remember one of these months, I went and sold it all. So, from buying it all the way, like say this was like my average cost right there. I was buying it all down here. Let's say that was like my overall average cost right there when it got up right there. Sold it, and so made really nice profits overall. It was a multi-year trade for it right there, but that was really nice. When I had done the same thing with ExxonMobil as well, so that's for long term. That's why I'm not buying it right now. That's why I got out of it. I wasn't sure how high it much go, but I just want to lock in that real good profit for it. So I'm waiting for the next downturn in oil and gas because that's eventually going to happen. You see these big legs down, like there's a big leg down, big leg down, big leg down. So just waiting. And we do have, look at this right here. So we have this 1, 2, 3, 4 right here. We do have a potential. This closes below that, down the green line down over there. So just waiting for either ConocoPhillips or Exxon to get it's probably one in. Yeah, I think it's a month trade. No, I don't know what that. Anyways, for it to go back down, I'll start doing it down there as well. But anyways, hey, dude, I got to go for the night. Great chat with you, JoJo. Take care out there. If you have any questions, anything like that, just let me know. I'd be glad to answer them. But take care. Pleasure chatting.